Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where we recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 20th of July, 2023. Alright everyone, let's get into it. Just before we jump into the news today, actually, I do need to give you all a heads up that most likely next week on Tuesday, Wednesday, and Thursday, there will be no refuel. This is because I'm attending a conference in Sydney, so I will not be obviously at home to be able to record a refuel. I will have my laptop with me, and if I have time, I will try to record one on at least one of those days. But yeah, just a heads up now that there probably won't be a refuel on Tuesday, Wednesday, Thursday, but I'll be back on the Friday next week in order to kind of recap those 3 days. Now, the conference is actually not really a I guess, traditional crypto conference. It's called the Digital Asset Conference, being held in Sydney. It's more for, I guess, like people to come together from different walks of life, not just the crypto ecosystem, but the TradFi ecosystem, regulators, for them all to come together and basically learn from each other. So I'm going because I really want to educate the regulators and TradFi people in Australia about crypto. And I think that I can get, maybe not get through to them, maybe that's the wrong way of saying it, but I think I can like educate them to the point where they can have a more favorable view of crypto. Because for anyone who's, among us who's talked to people outside of the crypto ecosystem, generally their view of it is not very favorable. Or or a lot of the times they don't even have a view, right? Because a lot of the times they might have the view of, okay, yeah, I heard about Bitcoin on the news, or heard about this on the news, I heard about FTX, right? But they won't actually have a strong opinion. But those that do have an opinion on the crypto industry, it's usually not great because they don't really know much about it, right? Now, I obviously do a lot of education through the Daily Gwei to try and rectify that and try and help people along with that. But it's going to be exciting for me to go next week and to basically talk to people who aren't exactly in the industry, but like regulators, for example, are going to be responsible for regulating this industry within Australia. TradFi, bankers, things like that want to integrate with crypto. I think they're going to need to know where to start, basically, and hopefully I can put them on the right path and start them on the Ethereum path, so to speak, rather than going some other direction. But yeah, just don't be surprised if there's no refuel on Tuesday, Wednesday, Thursday of next week, because I'll be there for 3 days. But yeah, if you are in Sydney, feel free to hit me up. I should have some free time to basically go for a coffee or go for lunch or go for food, whatever it is, while I'm there. I'll be around the city. I think the conference is taking place at the Crown in Sydney there. So yeah, if you're around, hit me up. I'd love to catch up and talk all things Ethereum. Anyway, moving on from that to the news of the day. So Nethermind today announced a partnership with Eigenlayer. So this is an article on the block that you can read, but basically the partnership entails working together or collaborating together to build different kind of tools, I guess, for Eigenlayer on Ethereum and other chains out there. Now, what this might look like is Nethermind might build software for Eigenlayer, such as software for like the Eigen data availability layer, kind of like a product there. And people could use the Nethermind software to run that instead of Eigenlayer themselves building it all together. So basically bringing a sort of client diversity, I guess, to Eigenlayer, which is pretty cool. But yeah, I mean, I've seen Eigenlayer partner with a lot of different companies within the ecosystem lately, and they're definitely doing a lot of business development, that's for sure, which is obviously great to see there. There's a lot of hype behind them. Man, I remember when I first talked about Eigenlayer on the Refuel, I believe it was like one of the first times that I saw them publicly, or that they had been speaking about themselves publicly, and they've come so far since then. And for them to be partnering with powerhouses like Nethermind really makes me bullish on the future of Eigenlayer and of course Nethermind. Now I should disclose here that I am an investor in Eigenlayer, but yeah, I mean, you guys know all about it at this point. So you can read the block article for a bit more details on this, but yeah, I guess like great to see this partnership coming into view so early in Eigenlayer's life. All right, Elemi here has shared a Dune Analytics dashboard that covers all the topics that hit your timeline, including token vaults, account abstraction, proxies, and more. So basically, it's a dashboard to track all of the ERC standards. So you can see here the different ERC standards on the dashboard. If I load up the dashboard here and scroll down a little bit, you got the ERC20 standard, obviously the normal fungible token standard, 721, one of the NFT standards here, 1155 multi-token. Some of these you've heard of before, and basically they're all just in this nice little table here, which shows the ERC with a link to the EIP, the the type that it is. Is it a token or something else? How many contracts there are deployed? How many contracts were deployed in the last 30 days? An example contract and more. So this is pretty cool. This is actually a different kind of dashboard on Dune Analytics than what I've seen in the past. This is definitely going beyond just tracking the normal stuff that you might see tracked, such as like TVL and fees paid on different L2s and stuff like that, stuff that I've showed before. This is basically tracking the ARC standards, which is very, very cool. And there's not just a list of the standards that is being tracked here. There's also a chart that shows, the contracts deployed over time, and as you can see here, the contracts deployed is at like all-time highs basically over the last few months. Then you can see if you keep scrolling down, you can see contracts deployed by type on this chart. So ERC20 tokens, 721 tokens, 777, and so on and so forth. There's a lot of info on this dashboard. So yeah, I just wanted to highlight this for you guys. You can go check it out for yourself. I'll link it in the YouTube description below, and kudos to LME for putting this together. All right, Gitcoin has announced Gitcoin Grants R18, which is taking place from August 15th to August 29th. 18, man, I still remember the first Gitcoin Grants round and how small it was and how basically unknown it was at the time. It was really just the hardcore Ethereum community that really knew what it was about and really participated in it. But we're at Grants round 18 now, and the special thing about this round is that it is going to be taking place on Optimism or the new public goods network. So you can see here a reply from Ben West here, who says all rounds will be on either Optimism or the new public goods network. And obviously, I think a big pain point for Gitcoin grants in the past has been the fact that on Ethereum L1, and this hasn't really been a huge pain point for recent rounds, more so for rounds maybe like, I guess before round 10, where essentially you would have to go on Ethereum L1, gas and donate on Ethereum L1, gas fees were really high, and the way it kind of worked was that each one of these, I guess like rounds, or each one of these donations that you would make was an on-chain L1 transaction, and the cost quickly eclipsed the donation amount. So say you were donating 5 DAI, for example, to a project, it would cost you more than that to donate in gas fees. So obviously Gitcoin started integrating with layer 2s to rectify that, and now they're going to be doing it seems, doing these Gitcoin grants rounds exclusively on Optimism or the new public goods network. And I talked about their public goods network last week, the new L2 that's come out of the Gitcoin ecosystem, so great to see that there. But yeah, you can go mark this down on your calendars, August 15th to 29th for Gitcoin grants round 18. All right, Polygon Labs has announced or shared details of the final pillar of the Polygon 2.0 roadmap here. So this is the governance framework. So Polygon 2.0 proposes a new governance framework built in collaboration with the community. The framework focuses on 3 main governance aspects, the 3 pillars of future development and growth of the Polygon ecosystem. So these 3 governance pillars are the result of months-long collaboration with the community across the Polygon ecosystem, and they are protocol governance, system smart contracts governance, and community treasury governance. And you can see here a picture basically showcasing this here. So protocol governance facilitates the decentralized maintenance and development of the Polygon tech stack. System smart contracts governance facilitates the upgrades of protocol components that are implemented as smart contracts. And community treasury governance facilitates ecosystem and public goods funding, supporting development and growth of the Polygon ecosystem. I think this is really cool because governance is a whole thing, right? Governance affects pretty much like every project out there, and there's been this meme for a long time that these tokens that that projects have are like useless governance tokens. That really it doesn't really matter, it doesn't really matter what these tokens do for governance. It kind of is useless because there's not really much governance going on. And for a lot of projects, that is true. But I think what Polygon is trying to do here is that they're trying to split this governance up into 3 core pillars, as I described, and make it so that governance isn't actually useless. You actually have a say over the protocol governance, over smart contracts governance, and community treasury governance, which are each distinct things, especially when it comes to the treasury, right? Because the treasuries for these projects are usually quite large, and you want to have a governance process in place that basically ensures that the treasury doesn't just turn into something that gets raided by people with the most Polygon tokens or Matic tokens, for example. So yeah, I mean, if you want to read more details about this, you can. There are blog posts linked in this Twitter thread here, which I'll of course link in the YouTube description below for you to check out there. But yeah, that is the final, I guess, like roadmap item detailed from the Polygon 2.0 roadmap. Now they have to execute on this, right? I mean, I've been talking about the Polygon 2.0 roadmap for the last month or so, and there are a lot of exciting things with it, but it's up to Polygon to execute on everything now. And honestly, I have a lot of faith in Polygon to execute here. They've been executing for years very well. They've grown one of the biggest ecosystems in crypto, and I've been proud to be an advisor to them throughout that whole period there. So yeah, excited for the future of Polygon governance here, and you can check this out. We'll link it in the YouTube description below. All right, speaking of governance, Optimism published a post called The Future of Optimism Governance, which is a comprehensive overview of Optimism governance, how it works now, and how its two-house system can evolve to support the collective for years to come. Now, there is a Twitter thread and blog post that you can check out for yourself here, but Optimism, I think, in terms of like innovations at the forefront of governance, Optimism is probably the one that's been doing it the longest and in the, I guess, like most forward-thinking way. They haven't just been doing governance as a meme or as a way to potentially drive value to the OP token or anything like that. They've been looking at governance from a radically new approach. And the biggest thing is this kind of like two-house governance system that they've had in place for quite a while now. And their primary goals of Optimism's governance system, as they detail here, are capture resistance and resource allocation, which, as I've talked about before, is probably the two most important things, right? Resisting governance capture is definitely the most important thing, because if your governance system is captured, then there's no point in having that governance system to begin with, because it basically becomes useless, because then it just becomes ruled by the people that captured the governance, right? And then resource allocation is just as important as capture resistance, because as I mentioned before, in a lot of these projects, the resources, aka the treasury, gets raided and people just basically steal money from the project for all intents and purposes. So with capture resistance, what they're doing is they're using this two-house model. They've got the token house governs protocol upgrades and sequence selection, and then the citizens house can govern the ongoing selection of citizens. And each house can check and balance the other's decisions. Together, they mitigate the danger of capture to either house. And it's kind of modeled off of real-world governance systems, like in the US, how you have the three branches of government. You have like the House, the Senate, and the judicial branch, and then there are various checks and balances within those things. It's kind of trying to model off that, because that is a model that has kind of worked for various democratic systems around the world. So can we translate that into crypto and make it work with token holder governance? It remains to be seen if it's going to work long term, but that is basically the gist of what Optimism is trying to do here. But if you want more details on all of that, you can read this blog post that Optimism published called The Future of Optimism Governance. It covers all of this as it stands today, and as well as the future. I'll link this in the YouTube description below for you to check out. All right, speaking of Optimism, there was an article that the block shared here basically saying Coinbase's base is going to be adhering to Optimism's new open neutrality framework. So Optimism have not published this open neutrality framework yet. I believe they're publishing it next week. But Jesse Polak, the lead developer or the lead of the Base project at Coinbase, has said that Base is going to be adhering to this open neutrality framework as its decentralization guidelines. Which is pretty cool to see that they've already stated here that they're going to be following along with it. But there's not really much more details on this, as I say, because it hasn't been released yet. But essentially, what I assume that this framework is going to try and do for the OP stack is basically say that all projects building on the OP stack should be, credibly neutral, should be giving back as much as they take from the OP stack, should be building things that that have a plan to decentralize, that are credibly neutral, that are censorship resistant, and that basically embody the values of not only Ethereum, but also the Optimism ecosystem as a whole as well. So just great to see that. I just figured it was worth pointing out, because there has been a lot of criticisms, I think, of Base, especially around the fact that it's tied to Coinbase, and people think, okay, well, if it's tied to Coinbase, what motivation does Base have to decentralize and be credibly neutral and be censorship resistant? Well, at the end of the day, they have every motivation to do that. And I believe that for quite a while. And I'll quickly explain why. regulatory is a huge reason why Coinbase would not want Base to be centralized, would want Base to be decentralized so that it can maintain censorship resistance, it can be credibly neutral, and it can be a place for not only Coinbase customers to go to, but everyone within crypto to go to and get value out of and to use without, fear of being censored or anything like that by Coinbase. And that is a huge regulatory burden off of Coinbase's shoulders by making the Base network into basically like any other L2 out there. So that's one reason. Another reason is basically having an arm's length or more than an arm's length detachment of Base from Coinbase. Yes, Coinbase hires developers that work on Base and obviously have built Base to this date, but it's kind of like what happened with the Ethereum Foundation, where they were really the sole developers of the Ethereum protocol for a long time. Then there were other developers that came along, like Consensus and Parity split out of it as well. Like, the fun fact is that everything that just basically started from the Ethereum Foundation, then it all split off. Joe Lubin went on to found Consensus. Gavin Wood went on to found Parity, and they built the Parity client and developed Ethereum stuff. And then other teams joined here and there, and they're part of different ecosystems. Like, as I mentioned before, Nethermind, that's an independent team that basically develops a client for Ethereum. There's Pry Labs. I'm just naming random things here. There's Sigma Prime. They develop the Lighthouse client. There are all these independent kind of teams now working on the Ethereum protocol, all these independent researchers working on the Ethereum protocol. And that's, I think, what the OP stack wants to become and what Coinbase can contribute to with Base and can make Base into an ecosystem like that there. But anyway, I'll cover Optimism's open neutrality framework when it gets published next week. All right, Espresso Systems has announced today their second major milestone in building their espresso sequencer, the Doppio milestone. So basically, this milestone is a new testnet, I believe here. The Doppio is basically a new testnet release here, and you can see details of this in the Twitter thread. I've talked about Espresso Systems quite a lot recently, especially around their shared sequencer technology that they're building that teams can plug and play, or L2 teams can plug and play into in order to basically decentralize out their sequences. Testnet 1 was codenamed Americano. It was their first demonstration of what they had built, which is something called Hotshot, which is a fast finality consensus protocol designed to reach the same scale as Ethereum's validator set, and they will use restaking to enable Ethereum validators to participate in the protocol. And then they have their second testnet here, which is Doppio. Now, it seems they're naming their testnets after different types of coffee, which I love because I'm all about coffee. But you can go check out more details about this. I'll link it in the YouTube description below. And the second espresso-related announcement is that their espresso sequencer testnet is now integrated with the Polygon zkEVM stack. So rollups built with the Polygon zkEVM stack can leverage the integration to process transactions with the Espresso sequencer. So a lot of movements happening in the sequencer space lately, and great to see Espresso Systems at the forefront here of that. All right, a big announcement out of the Starknet ecosystem yesterday. So Starknet announced that they are building, or they introduced something called Starknet Appchains, which I guess is on brand for Starkware or Starknet, because a lot of the other L2s are doing this as well, basically creating a framework for people to build their own L2 app chains. Now, we've seen announcements about this recently from Polygon and zkSync, and as well as the Arbitrum 1 and building the Arbitrum Any Trust chains, which have been out for quite a while now, as well as the OP stack. Pretty much everyone is doing the app chain thing. Now, you can see here Starknet says that Starknet is emerging as one of the most performant and innovative scaling platforms out there. The most brilliant and innovative apps and tools are all there. So it seems like they're trying to capture that market of people who want to be building their own app chains as L2s, and instead of just building it as a EVM, people can now build it as a Starknet app chain, which, as you guys know, is not an EVM chain. It is built using their own kind of virtual machine here, as well as their own programming language called Cairo. So yeah, cool to see Starkware join in on this race. It kind of like begs the question about what success is going to look like for a lot of these different app chains. Like I've said plenty of times before, and I'm repeating myself for the millionth time, but I've said plenty of times before that I expect there to be a lot of app chains out there. But now the question becomes of, okay, like who is going to capture most of the app chain market share for developers? You know, are developers going to choose to go with Polygon? Are they going to choose to go with Starknet? Are they going to choose to go with zkSync or OP Stack? So far, OP Stack has captured a lot of the mind share in that realm, but I think that's just simply because they're probably the furthest along when it comes to enabling people to easily deploy their own app chains. But really, it remains to be seen which ones are going to be used the most to build app chains and which app chains are actually going to be the most successful. And I don't think we're going to have an answer to that for many years to come. It's probably going to take at least 5 years to have any kind of answer to that, I believe, if not more. And it's not just going to be a static thing. There could be a very successful app chain that spins up, and then maybe in 5 years' time, it's a ghost town. Maybe people have moved on from it. This definitely happens a lot in the L1 space. I don't think it's going to be different for L2s, but as you guys know, I'd rather see L2s than L1s, right? And then there was also this new concept that I came across recently of these I think it's called a flash rollup or something like that, where essentially you would spin up a rollup or an app chain essentially for a particular use case and then spin it down once that use case is done. So for example, you could spin up a rollup to do like an NFT mint, and then once the mint is done, you spin down the rollup, and then the rollup basically just becomes ephemeral. It doesn't exist after the NFT mint. So there is so much happening in the L2 space, and I think that the main theme of ETHCC from what I've seen has been L2s. And it definitely feels like we're getting to the point where the L2 stuff is becoming overheated. And as I said a few months ago, I expect us to have a proper L2 summer, and that's where things will get completely overheated. That's where things will peak. And then L2s will probably go into this long... I wouldn't say bear market, but this long consolidation phase where a lot of the L2s will probably fade into irrelevancy, and then over the longer term, we'll see which ones stick around and which ones become the dominant ones. It's just the way things work, right? There's just the way these cycles work, but I definitely am more confident than ever in a potential L2 summer happening towards the end of this year, if not early next year, given everything that I'm seeing playing out in the L2 space, given that I'm seeing a lot of the traders now focus on L2s and the L2 tokens and speculating on them, and given that I believe that the general market is going to shift more towards PvE than PvP over the next 6 to 12 months, especially the next 12 months. And what I mean by that is that right now the market is PvP. And what that means is player versus player, where everyone's just playing against the same people, right? It's the same people in crypto right now, the same people trying to trade the markets. And that's why you see the crab market chop happening all the time. But when it becomes PvE or player versus environment, it means that a lot of new money is coming in, and basically it's no longer just the same people that were in crypto for the last few years playing against each other. Now those people are playing against the environment, so to speak, or the new people, and it becomes a lot easier to make money in that environment because the new people are just indiscriminately buying things for whatever reason, right? And there's a lot of new money coming in. It's not just the same money sloshing around, and that's what we saw happen in DeFi summer. That's what we saw happen in 2021. That's what I think we'll see happen for Layer 2 summer and the next bull market. So keep an eye on that. But it's going to be an interesting next 12 to 18 months at least, I believe. All right, speaking of L2, staying on the L2 topic here, Arbitrum has introduced phase 1 of the Arbitrum Foundation grants. Now, the full details are at this blog post here, and then you can go to arbitrum.foundation/grants to check out more info about this. But basically, the foundation grants are an ongoing initiative and will operate in distinct phases. With phase 1, they're going to be targeting decentralized applications and infrastructure for Arbitrum Nova and Arbitrum One. And current phase categories are listed here in this post, which I'll link in the YouTube description below. But essentially, this is a way for the Arbitrum community to distribute Arb tokens as grants out of the treasury, I believe, to different projects building within the Arbitrum ecosystem to encourage growth and business development and all that good stuff there. We've seen this from a bunch of different projects already doing this, but this is really the best use of a treasury, right? When it comes to distributing treasury funds, you don't want to see it rated by kind of useless people that just are getting paid to do nothing. You want to see the funds distributed to various projects within the ecosystem. You want to see it distributed to people actually working on Arbitrum and Arbitrum projects, and you want to see the money be well spent. And if you are an ARB token holder and you've delegated your ARB to, one of the delegates out there, they'll be voting on your behalf for this. But if you want to read all about this and learn more, you can check this out. I'll link it in the YouTube description below. Now, I talked about Athena yesterday and this new project that I backed, this new stablecoin project. So I'm not going to go into more detail about them because I don't need to. They have published a blog post today titled Introducing Athena Labs, describing basically what they're building. So if you're still confused about what Athena Labs is, what Athena is, and how it's all going to work and what exactly they're building, then this blog post is for you. It's basically your quick little read to get up to speed on the project altogether. Now, I'm not going to explain the project again because I explained it yesterday. So if you're interested in what that's all about, you can check out yesterday's video for my explanation there. And I should disclose again that I am an investor in Athena Labs here. Very excited about what they're building. But yeah, you can go check that out. I'll link it in the YouTube description below. All right, I got a few minutes here. I want to discuss something that's been on my mind over the last maybe couple of weeks, especially, and it's got to do with L2s, of course. And it's kind of like in the same topic as I was discussing before about the L2s and how we have so many L2s now and so much activity happening in that space. I do want to just quickly caution people against this. An L2 is cool and all, right? And it's better, in my mind, L2s are cooler and more useful and just better overall than L1s. But I think it's worth keeping in mind that not all L2s are created equal. If you go to l2beat.com, you can clearly see this, right? Some have multi-sigs, some have training wheels on them still, some don't have any training wheels, some don't have fraud proofs, some do, some are more expensive than others, all this stuff, right? They're not created equal. So when looking at the L2 space and looking at L2s to use, what you need to understand if you go and use Arbitrum 1, for example, and you're aware of the fact that Arbitrum 1 has fraud proofs, has a decentralized governance process, has time locks on their contracts to upgrade them and things like that. But then you go to another L2 that's maybe brand new. You need to assume that brand new L2, especially if it's not listed on L2 Beat, is completely centralized, right? Centralized to the point where there's probably just like a multi-sig held by the team securing the whole thing. Now, the reason why I bring this up is because, as I said before, the L2 space is growing exponentially. There are so many L2s coming online, but not all L2s are created equal, just like not all L1s are created equal, and you need to be very aware of where you're putting your money. For me, for example, I would not trust significant amounts of money on anything that is 100% completely centralized. It doesn't matter if it's an L2 or a centralized exchange or anything like that. And I'm very aware of just because it's an L2 doesn't mean that it automatically inherits Ethereum security and Ethereum's decentralization. It has to be constructed in a way for it to inherit Ethereum security and decentralization. It can't just do it out of the box, right? And I've gone through this before on the refill plenty of times, but I want to warn you guys because, as I said, I do expect there to be an L2 summer, and because it's going to be so easy to spin up L2s, what you're going to see is opportunistic people come along, spin up an L2 using, one of these kind of like development stacks, whether it be OP stack or something else, have it be completely centralized, have a completely centralized sequencer that they run, and then some of them will rug, some of them will be exploited, some of them will just shut down and there will be no escape hatch for you. So if you are bridging funds to these things, just be completely aware that you are taking on large risk in doing so, because if an L2 summer happens, there will be lucrative opportunities to make money on these things, but there will also be a ton of risk involved. So just keep that in mind and make sure that you're not taking on too much risk, that you're not putting all of your funds into something. It obviously doesn't feel good to lose money, but if you put all your funds onto one of these L2s that come up and the L2 just goes away and there's no way for you to get your funds back, because, for example, they're storing their data elsewhere and then the funds are just frozen because the data is no longer available and all your funds are stuck. I mean, that is going to be the worst feeling, right? Especially just before the bull market gets started, because I saw a lot of people blow themselves up in DeFi summer for various different reasons, and they blew up their ETH positions. They lost a lot of ETH, and then the ETH bull market happened, where ETH skyrocketed from like $300 to $400 to like 4K plus. That's like a 10x, right? And I saw people coping the whole time. They had been holding through the whole bear market, through the crab market, stacking ETH. They lost it from taking on too much risk, and they had to watch ETH skyrocket. I'm telling you guys right now, that is the worst feeling in crypto. That will make you severely upset, depressed, and that will probably make you not want to look at crypto anymore. So I don't want that happening to any of you guys. So just to keep in mind that you need to monitor your risk. Doesn't matter if it's an L2 or not. Doesn't matter what it is. Be aware of what you're interacting with always on chain. So yeah, just a little bit of advice there. But on that note, I'm going to end it there for today. So thank everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.